All right, so let's begin the show with the main highlights and takeaways from the RBI policy. And to discuss on this policy today and the strategy based on the policy that you should be adopting in your portfolio, I have with me Adhil Shetty, CEO and co-founder bankbazaar.com. Adhil, good evening and welcome to the show. Let's begin with a quick recap of the RBI policy and the highlights from an investor and loan borrower point of view. Adhil.
Yeah, so the main takeaway is that the repo rate remained unchanged at 6.5%. This is for the eighth consecutive time. So if you're an existing home loan borrower, you expected, the rate cuts would start, then that has not happened. So you're going to continue to pay the same rate on your repo-linked home loan that you were paying before the MPC announcement today. If you're a new borrower, you're scouting the market, you're trying to see what the best offer is available for you because the market is very competitive now and the margin has shrunk. So from a retail home loan borrower side, it's a time to think. If you're a fixed deposit, fixed income holder, rates appear to have peaked out. This 6.5% repo is probably the highest we'll get. We know today that banks are offering FD rates for normal customers, right, between 7 and 7.5%. Small finance banks have more risk, but they're offering 8.5 to 9%. So you're probably thinking you should lock in these high rates now. So it depends which side of the coin you fall on.
Exactly. There's more to discuss on this aspect also. But then, looking at two major central banks cutting rates, at least they've initiated the process. We still do not look in a rush to do that. Adil, are you also getting the sense from the policy today?
Yeah. So the governor brought up this point when the governor said that, hey, other banks might start cutting. And we saw the ECB cut, right, which was a really flagship move after a long, long time. But in his statement, the governor also said that we have to take into account the local pitch, the local consideration. So we're going to be looking at keeping inflation under control in India. The target for this year is 4.5%. Currently, in April, we were at 4.8%. He said we're going to keep growth in mind. So yes, I think foreign central banks cutting is a factor, but it's one in many factors. And I think the main factor the governor is emphasizing is the local inflation and the local growth that we need to see.
Point. We will also be joined by Mahendra Jajoo, CIO of Fixed Income, Mirae Asset Management India. But then till that time, I think let's talk about the loan portfolio that viewers have right now. So definitely we are going to recommend a lot of changes in their portfolio as per Mahendra whenever he joins. We'll ensure that they make more money by rebalancing their asset allocation as well. But then what's the point of making those profits and paying higher EMIs even now? Adhil. So there is no relief on that front, and we will also see, there'll be a process of rate cuts that will begin, but then the viewers will have, the borrowers would have a reset time as per, the translation period also would take time. So it's not like an immediate relief yet for them. So in terms of strategies, what do you recommend right now for all the EMI payers?
Right. So I'd recommend two strategies, and I'll try and lay this out in two clear points. So strategy number one, right, is the RBI has done something very good with the repo-linked loan. A lot of people don't realize this, but if you're on a repo-linked loan, which is what's been happening for the last several years, right, automatically when the rate cuts start, it might start 3 months, 6 months, 9 months from now. But whenever it starts, right, the benefit will flow through to you. You don't have to talk to anyone. You don't have to follow up. Automatically, as the MPC cuts the repo rate, the benefit that you've been waiting to see, right? You've not seen it in the last few years, but you'll see that flow through to you. Now, absent the rate cut, right, the strategy is called refinance. So what has happened, right, is you pay a loan rate, which is both the repo and a margin. Now, because the market is very, very competitive, when we looked at Bank Bazaar, the data 3 years ago, the spread on new home loans was about 2.5% above the repo. That spread today has come down to 2%. Now, if there's anyone out there, right, who's taken a home loan which is at 9.5%, 9.25% today, because the spread has come down, there is an opportunity for you to check online and see if you can make a saving. Obviously, you need to run a quick calculation saying by refinancing, how much will you save? So we give you a simple example, right? If I take someone who's got about 10 years left on their home portfolio, if they refinance from 9.5%, and at Bank Bazaar, we know a lot of people who are currently at 9.5%, and let's assume they're able to refinance to 8.5%, which is a 1% cut on each lakh, right? They save 6,500 rupees over 10 years. So on a 10 lakh loan, you're saving 65,000 rupees by refinancing. But obviously, this all depends on your credit score being good. It depends upon, the amount of home loans. So that's why we say every person is different. But run a check, and if you can save 0.5%, think of a refinance. That's strategy number one. Strategy number two, and you alluded to this earlier, is try and prepay, right? Just a simple rule of thumb, if you prepay 5% of the principal outstanding every year, a 20-year home loan can be paid off in 12 years. And today, this is absolutely relevant, right? If you're paying 9% on your home loan, and by the way, a lot of us listening to this show are paying 9%. If you're paying 9%, right, it's better for you to use that extra money, that extra bonus you have to pay off this 9% loan than to invest this money elsewhere, right? Because 9% risk-free post-tax is almost impossible to make. So the two strategies are check for refinance to a lower rate or check for prepaying if you're getting a bonus or you have some extra money available.
All right, so make use of the extra fund that you have in refinancing. Very important strategies explained by Adil, but then I also have Mahendra Jajoo on the show now. Mahendra, good evening and welcome to the Money Show. And we did discuss in brief about the RBI policy and the kind of highlight, but then understanding your take on it and the further trajectory of interest rate, and also looking at the bond yields, which are majorly range bound. Even the market today considered the policy as a non-event. No red flags as such, but how do you look at the bond market now, and what should be a fixed income strategy as far as slightly parking your money at this time is concerned?
So over the last couple of months, the overall macro environment has been changing very fast, and now we have seen that two major central banks, the ECB and the Canadian Central Bank, have already cut interest rates in the last 1 week. And therefore there is expectation that maybe the Fed will also change its course. Today we have the NFP number, so every data point that is coming is going to be very important. As far as India is concerned, our economy is on a sound footing. The growth projections have been upgraded from 7 to 7.2% for the current year. However, the inflation projections remain unchanged at 4.5%. And right now, there are multiple fronts on which there are uncertainties. There are major geopolitical situations all over the globe which could impact the commodity prices, specifically oil. We are still awaiting the monsoon. And then if the monsoon is going to be normal, it will be one aspect. But if the monsoon is going to be uneven, then it will have impact on the already volatile food and energy prices. So even though I think the space is available for the Reserve Bank to cut rates, I think they will be very, very circumspect in taking the first step. And that is the key message from the Reserve Bank. And everyone was looking forward to a more clear message from the Reserve Bank. And I think they have been very clear in communicating that given the fact that the growth is pretty strong already, and the inflation is still higher than their target, and the uncertainties remain, RBI will be a little more circumspect and patient before they get confidence that we are on a structural improvement and alignment path for the inflation to come down to 4%. So that is the situation now. But I expect that the way the data has come in the US, for example, for the first time since COVID, the lagging indicators are indicating a slowdown. For example, the GDP growth trajectory in the US for the last 3 quarters is 4.5, 2.5, and now 1.3. The first time we are seeing the job openings are lower than the job claims with a very small margin though. So I believe that if the Fed begins to cut rate as a follow-up to what ECB and Canada Central Bank is doing, then the expectations in India will be that the Reserve Bank will also start cutting rates immediately. But then as we discussed last time, that in the last leg of the rate hike by the Fed between February to October 23, RBI was already on pause. So the margin available or the elbow room available to Reserve Bank for cutting rates is rather shallow. And that's why I think the Reserve Bank governor took extra effort to explain that why the Reserve Bank will be a little more guarded. What does it mean for the bond markets? I think the environment is very favorable for the fixed income now. There is, I think, unanimous consensus that the rates have peaked. There is little to zero chance that the rates will go up from here. Hence, for any investor, depending on his risk horizon, his risk appetite, it's a straightforward, conclusion to start investing. I think the yield curve is very flat. So from 1 year to 10 year, the yields are same. So depending on the investment horizon and the risk preference, I think one should remain fully invested at that time in fixed income because it's a matter of time before the rate cuts happen, in my view.
Very well explained, Mahendra. But also, I want to understand that since RBI is trying to hold its ground, and it depends on a lot of factors, and that's when we will see a rate cut happening in India. But then, on their books or on their list of concerns, what are the primary or first three concerns that you would want to highlight, based on which they will decide a rate cut?
Geopolitical uncertainty is the top of their mind. The fact that the food inflation has been very volatile and it has been throwing the headline number in a very wide range of between, say, 4% to 7.5%. In fact, in the policy statement itself, the governor said that in the next couple of months, we may see a steep drop in the headline inflation number. But then, because of the base effect, it will bounce back again. So, one has to look at the underlying trend in the inflation and take a forward-looking approach rather than just look at the headline number on a month-to-month basis. And the third concern, I think, in their mind will be to build again a reasonable gap between the global market yields and our yields, because in the last leg of the rate hike cycle, the Reserve Bank paused 6 months before the Fed, and Fed hiked 100 basis points from where the Reserve Bank had paused. So I think that is a gap which has been very, very steady and we could maintain because India's fundamentals today are so much stronger than any other country in the world. But then, given the uncertainty in the global markets, we have seen how in Mexico today there is a huge reaction on the currency and possibly it will spill over to the bond side. So I think Reserve Bank wants to ensure that once they take the first step towards the rate cut, there is no immediate need for a reversal. So I think they want to make sure that all the grounds are covered. So these are the three, I think, main concerns. And I don't think that it doesn't mean that the Reserve Bank will not cut rate. It just means that the threshold for a rate cut is much higher than what the market had begun to believe. I still believe that after covering all these points, the space will still open for the Reserve Bank to cut rates. But then it may not happen in the next month or the month after. That's the only conclusion I can take at this time. I think it's a very sensible and very conservative approach which the Reserve Bank has always taken, and which has always helped India in ensuring that we don't have any market disruption.
Sure. I think with that, it's time up on the show for this segment also. Thank you so much, Adhil, and thank you so much, Mahendra, for being on the show and helping our viewers with their strategies going ahead. Thanks. All right, time for a quick break, and post that we'll be joined by Nisreen Mamaji, who will be doing your life financial planning on the show. Just in case you want to send across your questions, you can also do that. You can WhatsApp us your queries and also send across your questions on our email ID. See you after this break.
If you like this video, then like, share and subscribe to ET Now.